It's February 8th, 2011, and we are looking at a chart of the Euro US dollar. Let's start off with the weekly real quick and zoom out a little bit so you can see that we're kind of in a consolidation to some extent because we do have these lower swing highs and then higher swing lows in the near term. Again, this is a weekly, so not really near term, but this is the overall picture. If we zoom out a little bit more, you can see that we do overall, we do have these lower swing highs and then a lower swing low. So what I'd expect to see, maybe it's like more of a monthly time frame, but at some point the euro does continue down and take out these lows. So this is from last summer. We had quite a break on the downside, and then one heck of a recovery after that. But again, still the fundamental factors that kind of plague the euro haven't disappeared, and they're probably not going anywhere anytime soon. So essentially, when that does come back into play, I would imagine we do see that the euro does correct and continue on the path it was prior to this correction, or this relief rally rather. But anyways, going back to the more near term on on a weekly chart, you can see that we have some sort of a consolidation here, and again we are making these lower swing highs. You can see there's a swing high and a lower swing high here, and then we're also making these higher swing lows through here. Now, what I really want to focus on for this week is the last few candles we've been seeing here. So you can see we had a nice push up. We actually pushed up into this resistance area because these are you can see a few wicks here on the downside, and you can see that there was some selling interest. So essentially, after this candle right here, I was essentially expecting some sort of a down leg to form in the euro, but again we didn't get that. Instead, we got a push up. Anybody who was short pretty much got blown out of their position, and then once we did push up a little bit further into some more resistance, a lot of overhead supply here, we saw a very clean, or a very rather dramatic reversal in price in lower time frames, and it closed back down near the open of the weekly session. So again here, another topping tail candle, shooting star, whatever you want to call it, but it's very clear to see that the buyers did have a very nice push in the beginning of the week, and the sellers were clearly in control by the time Friday came around. So if we take this down to a daily time frame, we can see just that. We can see that there was some sort of a doji up here, then a very nice sell-off. So essentially this bar right here took out a couple days worth of buying. Couple more things I want to point out here. This is a daily chart, so we zoom out a little bit. There's an area of support here that I've been watching, and you can see price kind of came down here, almost tagged it, put in a nice potentially reversal bar at the bottom of the range here. So in keeping with that, the next logical move would be a push up, and that's what we got. We cleared the high of this bar, confirming this pattern right here, and we pushed up. Now again, it's about 3 o'clock Chicago time, 4 o'clock New York time, and it's tough to say what's exactly going to happen here because there's still a good amount of time left in this session. So this could very well be a shooting star here, or it could very well be a nice bullish candle, but it's important to keep in mind we have that overall weekly trend to the downside. So some sort of retracement is very welcoming because it gives us a better opportunity to get an entry to the short side. But anyways, taking it down to even lower time frames now, so we have that bearish bias in the back of our mind, and we're going to keep that intact as we do our analysis on the rest. The time frames here. So now we're looking at a 4-hour chart, and if we take a Fibonacci retracement and go from our high point here to our most recent lows, you can see that just today price had a very nice run up, a nice correction, and we just barely pushed into 50% retracement, and a very bearish bar has closed since then. So keeping with that, I would expect that we do see some more bearish pressure, some more selling pressure come into this market, and again, we do have a swing low, swing high. You can see this as a lower swing low relative to this one, and potentially we could be putting in a lower swing high. So that on a 4-hour chart would confirm that we do have a reversal in trend, and we're now coming into a downtrend. All right, so hourly, same picture really. You can see the magnitude of the sell-off we've had over the last few hours, pretty much wiped out this bullish bar right here, which is never a good sign if you're a buyer. But again, we'll see what happens. This is pretty much the dead time of the day. So, when Asia does open up again and London comes online, then we'll have to see which way they want to drive this market. But a trade that I took, and again, I haven't really traded in the last couple of weeks, but I pretty much came in here today and sold this thing right off the line. The reason being, this is a very obvious level. We're talking about, from February 1st to the 8th, so this is the last maybe week of action, and halfway back of that is something that I bet a lot of people are watching. Again, we do have some sort of congestion here. It's not a very clear, resistance level by any means, but if you were to drop a line across, you can see we have some wicks here, and then also we have a couple swing highs right here. So, we definitely have seen some selling in the past in this area. So anyways, I came in here, I took a trade right off the line, put a 15 pip stop there, and at this point I'm sitting at break even, but you can see we had a considerable sell-off from that point. Now, there's one more thing that I actually want to pull up here. And that's this screenshot right here. So essentially, what you can see is this is a screenshot that I took, just after entering this trade, because I got in right here, right off the line. Essentially, worked out very nicely. Moved my stop to break even, and if we go back to the chart very quickly, we can kind of get an idea of what I was looking at. So if we zoom out here, I have this nice trend line drawn in on a 5-minute chart. But it spans about a day or so. We're looking at from roughly mid-February 7th to today's action. So definitely an area that we might consider seeing some buyers. And essentially, when price did break down, I again, we do have that overall bias to the downside because of what we're seeing on the weekly and daily time frames. And in keeping with that, I wanted to see if I can hold on to this guy for a little bit longer. So again, price came down to the trend line. Now this normally would have been an area to take profit. As you can see on that screenshot, what I'll do is I'll post that screenshot on the blog as well, just so you guys can try and get an idea of, just see what's going through my mind as I make these trades. But we came into this area of support, bounced off, we broke the reference for the sellers here, got a close above. At that point, the buyers are in control in the near term. So essentially, because we have that overarching bearish bias, I was willing to let price actually come up, all the way in, past this level before I would get out. Because my entry's up here, that that would still be like maybe 5 to 10 pip gain for me, which is fine. It's not a loss. I'm actually in a good spot in this trade. But you can see that we do have some previous resistance here. And if we take a Fibonacci retracement, we have the 61.8% retracement here. And a lot of times some people will use that level as a failure for the trend. So again, if that level was to be breached, then some Fibonacci traders would say, hey, prices moved too far in this retracement, and the odds or the probability of it making a higher swing low and continuing up are exponentially high. So again, I'm using that as my reference or as a gauge to see, okay, well, are we going to produce that? Essentially before, what we had in this market was a series of higher swing highs and higher swing lows, which is an uptrend. Again, coming into the trend line, I want to see a failure of that, and I want to see a lower swing high put in. That's exactly what we got so far. So again, we are trading below the trend line, and we are holding these 50% retracements or 61.8% retracements, and I would expect further downside from here. So again, kind of working into a swing trade. My stop is going to be sitting right above this level right here, as it is the most recent swing point. All right. So again, coming into the dead part of the day, really dead zone here, but as we do continue on, I'll probably post some more analysis on the blog, maybe probably some screenshots, or if not a video, to see how I'm managing the trade and how things are progressing. But thanks for watching, and hope you're having a good trading week.